Hello guys, welcome to another video. This is lecture number 2 of IAS 33 which covers EPS earning per share. This is your financial reporting tutor Uzair Awan, and in this video we'll be continuing with EPS. So in lecture number 1, just to give you guys a quick recap, we studied about what was EPS, how to calculate the EPS, how do the investors look at EPS, right? And then we discuss about different types of share issue, in which number 1 we discuss about the full market price share issue. We did few of the questions to get grip of the area. Then we discussed about the bonus issue. We did few questions of that as well to get grip of the area. And now we are going to discuss the third one, which is the right issue. Okay, so whatever I write, that is something you guys need to copy with whatever I say. Okay, so whatever I am saying, whatever I tell you guys to write down, make sure to write it down as well. So first thing first, right issue. What is a right issue? So right issue is basically when a company shares issue to its existing shareholders. So I want you guys to write it down, that right issue is the share issue when a company, when a company share issues to its existing shareholders, not to the new shareholders, but to the existing shareholders. Okay, so if I am a company and I have like existing shareholders, I'm gonna offer them to buy more shares from me. Okay, so that's what a right issue is, number one. And number two, always remember that right issue is done at a discounted price. Now what do I mean by a discounted price? So let's say that a company has right shares issued, let's say 1000 shares. Okay, they issued 1000 shares, okay, through a right issue, and the market price at that time of one share of the company was $4 share, $4 per share. Okay, so the market price of that share, the market price of the share of that company was $4, okay, in the market. And the issue price at which the company issued the share was $2. Okay, so let me just repeat again. The company did a right share issue of 1000 shares. The market price at that time was $4 per share. Okay, but you can see that the company issued the share at a price of $2. So isn't that a discount of $2? Yes, it is. Okay, because the market price was $4, but the company is issuing the shares at $2. And remember, like I said before, that right share is done to the existing shareholders. So all those existing shareholders of this company will be offered to buy another share for $2. So whatever number of shares they want to buy, they can buy that for $2 per share, which is lesser than the market price. So isn't that a good thing? Yes. So the thing is that what I'm trying to establish over here is that you guys from now onwards will need to remember this, that right issue has an effect of bonus issue as well. It has an element of bonus issue as well, and of a full market price also. Why do I say that? Because see, whenever you do a right issue, yes, you are giving it at a price lower than the market price, but still you are getting new money, right? I am getting new money through the right issue. Correct, I am raising new money through the right issue. So that's why we say that it has an element of full market price issue, because you are getting new money into the company. It's not like a bonus issue where you don't get any new money, right? So this is why we say that it has an element of full market price issue. But what about the bonus issue? Because see, the market price of the share is $4 and they're issuing it at $2. So there's a $2 discount. So we say that this $2 discount basically reflects a bonus issue. Okay, because they're leaving their $2. Okay, the share is $4. The share, the actual market price of the share, one share is $4, but they are giving it for $2, which means they're just leaving their $2, right? So that would be counted as a bonus issue. Okay, so that this is why we say that right issue has an element of bonus issue also and full market price issue also. Okay, so having said that, let's see a question, because that is what helps us to understand the scenario much better. Okay, so like always, I'm gonna draw my year, right? So my year, always starts from 1st Jan and it will end at 31st December. Okay, and let's say that on 1st of August, the company do a 1 for 5 right issue. Okay, the company does a 1 for 5 right issue, and the market price just before the right issue. The market price just before the right issue is given to us, which is, let's say, $6. Okay, and the issue price, because like I told you that right issues are always done below the market price. They are always issued at a price below than the market price. Okay, so if it's $6, let's say that the issue price is $4, for example. Okay, so this is an example question. We have our year. We are told that on 1st August the company has done a 1 for 5 right issue. The market price just before the right issue was $6, and the issue price is $4. Clear? Now, what are we going to do? Okay, wait, I need to just write over here that the number of shares at the beginning of the year were how many? Let's say 10,000. Okay, so this is a question. Now, how we would adjust this right issue? So we already know how to adjust the full market price share issue. We already know how to adjust the bonus issue, because that is something we have already learned in the first lecture, right? Now, in the second lecture, we have to look at how to adjust right issue. Now, remember that in order to adjust right issue, you need to calculate something called as the bonus adjustment factor. Okay, do you guys remember bonus factor, right? For the bonus issue that we used to calculate. Similarly, in right issue, you need to calculate the bonus adjustment factor. Okay, now the formula for calculating the bonus adjustment factor is market price per share just before the right issue, which is already given to us in the question over here, $6, right? So market price just before the right issue, which will always be given to you in the question, and then you divide it by the theoretical x right price per share. So you take your market price per share just before the right issue and divide it by theoretical x right price per share. Now, what is theoretical x right price per share? So basically, theoretical x right price per share is the price of the share after the right issue has been taken place. Okay, so how do you calculate the theoretical x right price? Let me just tell you over here. Again, guys, focus very carefully, because it's something you guys need to learn. Okay, just like the way I taught you guys how to calculate the bonus factor for the bonus issue. Similarly, I need you to focus and learn how to calculate the bonus adjustment factor, right? So this is the formula, and in this formula there is something called as the theoretical x right price per share, which is the price per share after the right issue has taken place, right? And again, you need the value. So for value, you need to learn how to calculate it, right? So theoretical x right per share, or you can just say price. Okay, how do I calculate the theoretical x right price? Now focus on the screen very carefully. Now the way that you calculate theoretical x right price is that you see that, okay, what is the right issue? I mean, how many shares am I getting through this right issue? So you can see it says 1 for 5 right issue, which means that for 5 shares that you already own in the company, you're gonna get one new share. Okay, for every 5 shares that you own in the company, you will get one new share. That is what it means by 1 for 5, right? So I can say that okay, I own 5 shares in this company, and the value of those shares are $6 because that's the market price, right? Normal market price of your share is $6 as per the question. So these 5 shares are valued at $6 because obviously I bought them at market price, right? So 5 shares at $6 each is gonna be a total of $30, right? But this one share that I'm gonna get is not gonna be at market price. I'm not gonna pay $6 for this. How much am I going to pay for this? I'm gonna pay $4, right? So 4 and only one share, so 4 times 1 is $4, right? So that means for 5 shares I paid $6 because obviously these shares are the ones that I bought from the market, right? And this one share is the right issue share that I'm getting, and it is at a discounted price, so I paid $4 for it, right? So 4 times 1 is 4. So 30 and 4, that's a total of $34. Okay. And these total share are how much now? 5 shares before, 1 new, so that's 6 shares now. So how do I calculate my theoretical X right price? I'm going to basically simply divide this total value, $34, with the number of shares, 6 shares, right? And my theoretical X right price is gonna be 5.67. Okay, I'm just gonna use the short form from now onwards, TERP, which means theoretical X right price. Okay, so my TERP, theoretical X right price, is equivalent to 5.67. Okay, so this is how you calculate the theoretical X right price. You see that okay, how many shares do I already have? I have 5 shares, and I have obviously paid market price for that, so that's $30, and then I was given one more, which for which I paid $4, so that's $4 more, so that's $34, and total shares of 6, so 34 divided by 6, $5.67. Once I have my theoretical X right price, now I can calculate my bonus adjustment factor. So I'm just gonna take my market price per share just before the right issue, which was $6 in the question, right? And I am going to divide this with my theoretical X right price per share, which is 5.67. Okay, so this is my bonus adjustment factor. Okay, now we have successfully learned how to calculate our bonus adjustment factor. Now, this is obviously just one aspect of solving this question, learning how to calculate the bonus adjustment factor, but now we need to solve this. Okay. So if I were to calculate the EPS of this question, how would I do that? First of all, we will calculate the bonus adjustment factor. Once we have that, now we are going to take our weighted average. Now, why are we going to take the weighted average? Because I just told you guys that right issue has an element of bonus issue, and it has an element of full market price issue. And obviously you're getting more money, so you're going to take weighted average over here as well. Okay. So we'll be using the same weighted average number of shares technique to basically solve this question, right? So at the start of the year, we had 10,000 shares, correct? Just see over here, at the start of the year, we had 10,000 shares, correct? And then you can see how many months from Jan to August, Jan, Feb, March, April, May, June, July, right? So we have 6 months. Sorry, Jan, Feb, March, April, May, June, July. Yeah, 7 months. We have 7 months, okay? So 10,000 shares into 7 over 12, right? And then now we are going to multiply these shares with our bonus adjustment factor, which is 6 over 5.67. Okay. Then there's this plus over here. And now you guys know that we had 10,000 shares in issue. Then on 1st August, we did a 1 for 5 right issue. Okay. So if we did a 1 for 5 right issue, how many new shares did we get? If we did a 1 for 5 right issue, how many new shares do we get? So how do I calculate how many new shares do I get? It's very simple. Just take your shares, which are 10,000. and times it by 1 over 5. Okay, so like this, 10,000 into 1 over 5. You take your shares at the beginning of the year, you just times it by 1 over 5, and that's going to give you how many new shares you got through the right issue. Okay, so if you guys do 10,000 into 1 over 5, that's very easy. Those are 2,000 shares. Okay, so you got 2,000 new shares to this right issue. Okay, so I'm going to come over here. I'm going to say that, okay, I had 10,000 shares. I got 2,000 shares more through the right issue. So that's 10 and 2, which is 12,000, right? So I'm going to write 12,000 into, now how many months do we have from 1st August to 31st December? August, September, October, November, December. 5 months, right? So 12,000 into 5 over 12. Now notice how after the right issue, I did not multiply my number of shares with the bonus adjustment factor. No, I did not do that, right? So this is something you guys need to remember, that bonus adjustment factor for the right issue is done till the time your right issue is not issued, sorry. Okay. As soon as they are issued, you cannot, use the bonus adjustment factor after that, because there is no need to adjust. Okay, since the right issue has already taken place. So that's one thing, again, a new thing to remember, that from 1st Jan to 1st August, the time before the right issue, you are going to multiply the number of shares with the bonus adjustment factor. Okay, but once the right issue has taken place, then after that, you are not going to multiply the number of shares with the bonus adjustment factor. You are just going to do the bifurcation of months, but not multiply it with the bonus adjustment factor, just like the way we did over here. No. Okay, because this is for before right issue and this is after right issue. Okay, so remember this. Now after this, what is our weighted average number of shares? So it's going to be, let me just do this in my calculator pretty quick. 10,000 into 7 over 12 into 6 over 5.67. So this is 6173 plus 12,000 into 5 over 12. This is 5,000. So if I total these, I am getting 11173 shares. Okay, 11173 shares. This is what I'm getting. Okay. So these are my weighted average number of shares. And now since I have my weighted average number of shares, I'm going to calculate my basic EPS, right? My basic EPS is going to be, what's the earning? So I didn't write the earning, but let's say the earning is 50,000. Okay. Let's just take a number. Let's say the earning is 50,000. So my earning is 50,000. Okay. And my weighted average number of share is 11173. So if I divide these, I am getting 4.47 per share. Okay, so this is my basic EPS, 4.47 per share. All right. Now, if for example they ask me to calculate the restated EPS, do you guys remember the restated EPS? The very last thing we discussed in lecture number 1, how to calculate the restated EPS. So it was that you take your last year EPS, right, and you times it by 1 over the bonus factor. Now bonus factor was in the case of bonus issue, but in the case of right issue, it's going to be 1 over the bonus adjustment factor. Okay, so you have your bonus adjustment factor over here, 6 over 5.67. You're just going to divide it by 1 and times it by the last year EPS, whatever would be given to you in the question. Okay, in this question we do not have the last year EPS, so we will form one question where we do have, so that we can apply this also. But in a nutshell, this is the formula, same formula, just that instead of bonus factor, you are now going to write bonus adjustment factor. Simple, right? Everything else remains the same. Okay, so guys, it's very easy. I know there are a lot of new things, but again, every time we start a new area, I mean, a new type of share issue, first of all, we discuss the market price, right? You guys thought it was difficult, but then we did question and you guys got a grip of that. Then we started bonus issue. It had few new things like the bonus factor and so on. But we did few question and you guys hopefully got the grip of that. Okay. Now this is the third type of share issue, which is called the right issue. And what we have learned about right issue is that over here you have to calculate the bonus adjustment factor. The formula for bonus adjustment factor is that you take the market price per share just before the right issue, which will always be given to you in the question, and you divide it by theoretical X right price per share. Now, theoretical X right price per share has its own way of calculating, which is something you guys need to know because without that, you cannot calculate the bonus adjustment factor, correct? And the way to calculate theoretical X right price per share is very simple. You will go to your question, you will see what's the amount of right issue that has taken place. So it says 1 for 5. So you say that, okay, that means 5 for every 5 shares that I held, I got one new. So the one new that I got would be at $4 at discounted price. So that's $4, right? 4 times 1, $4. And the previous $5, the previous 5 shares that I already had would be obviously of $6 because they are not right issue. I bought them from the market, right? So 5 times 6 is $30. So that's an overall wealth of $34 and total shares of 6. So 34 divided by 6, that will give me my theoretical X right price. Once I have my theoretical X right price, I'm going to divide it by the market price just before right issue, which was given to us in the question, which will always be given to you in the question, $6. So 6 over 5.67, that's my bonus adjustment factor. Okay. Once we have our bonus adjustment factor, we are going to use the same weighted average method to calculate our shares. Okay. Just like the way we used to do in the full market price share issue, because again, I told you that in right issue, you have an element of bonus issue as well and a full market price issue as well. Okay. So um, we took our shares at the beginning of the year, which were 10,000. We looked at the number of months from 1st Jan to 1st August. These are 7 months. So we said that, okay, 10,000 into 7 over 12 into the bonus adjustment factor plus. Then on 1st August, there was a right issue. So after the right issue, you do not take bonus adjustment factor. Remember that. It's just still the right issue. That's it. After the right issue, you don't take it. Okay. So that is why after the right issue, what I did is that I just saw that, okay, what's the new number of shares that I got through this right issue? And the way to calculate the new number of shares that you got through this right issue is that you just take the fraction 1 for 5 and you multiply it or times it by the shares at the beginning of the year. That's 10,000. So you got 2,000 new shares. So 2,000 new share and 10,000 before previous shares, right? So 10 and 2 are 12,000 new shares. So 12,000 into 5 over 12 because from 1st August to 31st December, these are 5 months. Okay. So that's why you see a 5 over 12 over here, but you do not see me multiplying it with bonus adjustment factor because again and again, I'm saying the same thing that you do not need to adjust the bonus adjustment factor after the right issue. You just do it till the right issue. Okay. So the first 7 months, there was no right issue, right? So we did the bonus adjustment factor, but once the right issue has already taken place, we did not multiply it even more. Okay. No further multiplication is needed. Okay. Then we added them together our weighted average of shares. When we have the weighted average of share, we divided by our earning and we got our basic EPS, which is 4.47. Okay. So this is an example of right share issue. Okay. Whenever you have a right share issue, how would you solve that in the question? Okay. So let's discuss another question. So following the same technique and keeping the solution of the first question, which I hope you guys have noted down in front of you, just solve this second question that I'm giving to you. Okay. And in this question, I'm going to ask you to calculate EPS also and the restated EPS also, right? Which means that obviously I'm going to give you the last year EPS also in the question. So don't worry. Let's say that at the beginning of the year, the number of shares that were issued were 6,000. Okay. And the beginning of the year is 1st Jan 18. Okay. Then we have our complete year, which will be ending at 31st December 18. The overall earning throughout the year of the company was 20,000. All right. Then on 1st of October, the company did a 1 for 4 right issue. Okay, and the issue price was $2, whereas the market price before the right issue, just before the right issue, was $3. Okay, and just last one thing, that the last year EPS was $3. Okay, so what's the requirement of the question now? The question requirement is that you guys need to calculate number one, EPS, and number two, restated EPS. Okay, so this is the entire question, guys. Please stop the video, do this question yourself, try this question yourself, and then you can resume the video to see me solving it, and then you can cross check your solution with mine. Okay, all right, so I'm hoping that you guys would have solved it yourself first. Now I will start solving this question. So first of all, what do I need to do? I need to calculate the EPS. So bonus adjustment factor, if I have to calculate that, wait, let me just change the color for my solution. So you guys know that for right issue, we first of all calculate our bonus adjustment factor. But for bonus adjustment factor, I do know the market price just before the right issue, which is $3 divided by the theoretical X right price. I don't know the theoretical X right price, therefore I will have to calculate my theoretical X right price. Okay, and how am I going to do that? I taught you guys that first of all, look at the fraction. What's the right issue? It's 1 for 4, right? So that means that I had 4 and I got one new, right? Now the ones that I had were obviously at the market price, which is $3. I bought them at the market price, so 4 times 3 is $12. And the one new that I got was at a discount, and the issue price was $2. Okay, so 2 times 1 is $2. So that means 12 plus 2 is $14, correct? And my new number of shares are 4 plus 1, 5. So my TERP, theoretical X right price, would be 14 divided by 5, right? And that is 2.8. Okay, so I do have my TRP now, and I'm going to go to my bonus adjustment factor, and now I can write my TRP, which was 2.8. Yeah, so 3 divided by 2.8, that is my bonus adjustment factor. After calculating the bonus adjustment factor, I'm going to move forward to calculating my weighted average number of shares. Okay, and the way that I calculate my weighted average number of share is that I look at the shares at the start of the year, which are 6,000. Okay, I multiply this with my bonus adjustment factor, which is 3 over 2.8, and then I multiply this with the number of months. So from 1st Jan to 1st October, how many months are these? These are 9 months, right? So 9 over 12. Okay, so 6,000 into 3 over 2.8 into 9 over 12, plus now we had a right issue. So how many new shares that we got through this right issue? So like I told you, take the shares at the beginning of the year, just multiply this with the fraction. So that's 1 for 4, 1 over 4. So 6,000 into 1 over 4, that is going to give you a value of 1,500 shares. Okay, so 6,000 into 1 over 4 is 1,500. So the new shares that we got through this right issue were 1,500. So 6,000 before, 1,500 more, that means 7,500 shares are now in issue. Okay, and how many months are these in issue for? From 1st October to 31st December. These are 3 months. Okay, so I'm just going to do my 3 over 12, correct? No multiplying with the bonus adjustment factor. Okay, so once I have done this, I am getting an answer that is 6,696 shares. Okay, and now I can easily calculate my EPS. So my earnings as given to me in the question was 20,000 over here, right? And I am going to divide it by the shares, which are 6,696. So my EPS is 2.99 per share. That's my EPS. Okay, and like I told you guys that this was the first requirement of the question, but there is second requirement of the question, which was to calculate the restated EPS, right? So restated EPS, you guys know the formula. It was that you take the last year EPS, which is $3 given to us in the question, right? And you multiply it with 1 over the bonus adjustment factor, which was how much? 3 over 2.8, right? So 3 over 2.8, and that is going to give me $3 into 1 over 3 over 2.8. So that is giving me 2.8 per share. Yeah, 2.8 per share. That's my restated EPS. Okay. So now, as you guys can see on the screen, I have my EPS also, and I have my restated EPS also. So this is my EPS 2.99 per share. Okay. And this is my restated EPS, which is 2.8 per share. So I hope those who tried this question themselves first got the correct answer. Even if you guys got you didn't get the correct answer, it's okay. You guys can look at the solution. I just solved the entire question for you guys, right? So you can just cross check that and see what went wrong. Okay. So this was the solution for this entire question, guys. All right, guys. So now let's move forward. We have now done and we have looked at all the three scenarios: full market price share issue, how to deal with that; bonus issue, how to deal with that; and finally the right share issue and how to deal with that. Okay. Now, obviously, right now we have just looked at specific cases, right? We first of all looked at full market price, then bonus, and then right issue. But in the question, in the exam, you're not going to be given specific scenarios. Rather, you will be having multiple issues, right? What do I mean by multiple issues? Multiple issues, uh, it's simple that you guys know we studied multiple issues. First of all, we studied the full market price issue, right? Then number two, we studied the bonus issue, right? And then we studied the right issue, right? So in the question, they will have any two of these trees given to you together, okay? And you will have to solve it. So right now we have just looked at specific cases. We have not seen any case where these three or these two are given together, right? So that is exactly what is our next area, and we'll be looking at that. First thing, that what we learned about full market price issue, that it's a full market price and you just adjust it from where it happens, right? Or wherever it takes place during in the mid of the year or at the second quarter, third quarter, whatever, whenever the full market price share take place, you just pick it from there, right? But as far as bonus and right issue are concerned, you know that you first of all adjusted from the beginning of the year, number one, in both the cases, and number two, in case of bonus issue, you calculate bonus factor, whereas in right issue, you calculate the bonus adjustment factor, right? So this was just a little summary. Okay. Now we look at multiple share issue. So we have our start of the year, which is 1st Jan. Let's change the year now. Let's take it 16. Okay. I've been taking 18 for so long, so let's just change the year. Not that it changes anything, but anyway, so number of shares are 10,000 at the beginning of the year. Okay, and then we have our end of the year, which is 31st December 16. Okay, then let's say on 1st of October, the company did a full market price share issue. The company did a what? A full market price share issue of 2,000 shares. Okay, and not only that, since we are looking at multiple issues, so on 1st April 16, the company did a 1 for 10 bonus issue as well. Okay, so you see in one question there is full market price share issue also and bonus issue also. This is what we call multiple issue question, right? Where there are more than one or all the three issues taking place. Okay, so this is the question. Now, this is not something new. You guys already know how to account for bonus issue. You already know how to account for full market price. You already know how to account for the right issue, right? So if you guys want, you can try this first yourself and then you can look at my solution. Or if you guys want, you can do this first question with me and then from second question, you can try it yourself. Okay. So anyway, this is the question. And one thing that I forgot is to give you guys the earnings for this entire year, which is 20,000. Okay. So let's solve it. Come on. Let's solve it. Um, First of all, there's a bonus issue. And bonus issue, you guys know, is adjusted from the start of the year, correct? Bonus issue is adjusted from the start of the year. You guys know that, right? Whereas the full market price share issue is not adjusted from the start of the year. It is adjusted from where it happens. For example, in this case, 1st October, right? So we will look at it later. First thing first, the bonus issue. We will adjust it from the start of the year. First thing. Second thing, that there is a market price issue, full market price issue in this year, right? So that means we'll be using the weighted average methodology to basically solve this question, right? So we'll be looking at the weighted average number of shares, okay? So I'm going to take 10,000, which are the number of shares at the start of the year, and I'm going to multiply this with the bonus factor, just like the way we learned, right? But bonus issue, we are told that there is a 1 for 10 bonus issue. We do not have the bonus factor, so no worries. We already know how to calculate the bonus factor, and that is exactly what we are going to do. So guys, how did we learn to calculate the bonus factor? Remember that any share issue before the bonus issue was always considered to be 100%. Then we used to form a fraction that, okay, 1 for 10 in terms of percentage means how much? 10%, right? So that means 110%. And if I convert this 110 into a non-fraction, it's gonna be 11 over 10, correct? So 11 over 10 is my bonus factor, correct? So I'm going to write 11 over 10, my bonus factor. Okay, and how many months from 1st Jan to 1st April? Those are 3 months, right? So 3 over 12. So first case done. Now on 1st April, the bonus issue has taken place. Remember this. On 1st April, the bonus issue has taken place. So therefore, you are not going to now multiply with bonus factor because it has already taken place, right? So 1 for 10 bonus issue, the bonus issue has taken place. Now what we are going to do, we are going to say that, okay, 1 for 10 bonus issue. How many new shares are issued now? Obviously it's 1 for 10, right? So that means that 1 over 10 into 10,000, because I need the new number of shares, correct? They are, you did a bonus issue, so you shared new numbers of shares, right? So I need that number of shares that are issued. So just like the way I taught you for the right issue, the same is the case for bonus issue, that you just take the fraction 1 over 10 and you times it by the number of shares at the start of the year. So 1 over 10. We are not going to multiply it with the bonus factor because the bonus issue has already taken place. Done. Now, how many months from 1st April to 1st October? 1st April to 1st October is 6 months, right? So 6 over 12. Plus, now after the full market price issue, you got 2,000 shares, right? It's given to us in the question, 2,000 share. So 11,000 before, 2,000 more, that's 13,000 shares now, right? And um, it's from 1st October to 31st December, which means 3 months. All right, guys. So the weighted average number of shares that I have now is 11,500 shares. Okay, so I have calculated my weighted average number of shares, and now I just have to calculate my basic EPS, right? Which is that you take the earning, which were 20,000, and you divide it by the weighted average number of shares, which are 11,500. So 20,000 divided by 11,500 is $1.74 per share worth of EPS. Okay, any problem? See, So this is how you deal with a question which has multiple issues in a single question, right? For example, in this question, we have a 1 for 10 bonus issue and a full market price share issue. So we said, no problem. We already know how to deal with them individually. And that is exactly what we are going to reflect in this question. Okay. So we did the same thing, same technique, same thing that we have learned, nothing new, right? So this is how you will be solving the question. So let me just zoom out a little bit so you guys can have the question and the solution in one frame. Okay. So yeah, that should be it. You guys can take your time, look at the solution, copy it down, and then we'll look at another question. Okay, so let's move to the next question. So the next question, I am going to write it over here and it is going to be done by you guys. Now the next question says that it is 1st Jan, let's take 17 now, okay? And I am going to draw my year. So we have 31st December 17, all right? And on 1st of March, on 1st of March 17, the company did a full market price share issue of, let's say, 4,000 shares. Okay, first thing. And the second thing that the company did in the same year on 1st November was a 1 for 5 right issue. The issue price was $4, okay, and the market price was $5. And just to make this question a little more interesting, let me just give you guys the EPS for the previous year. And you guys know why I'm giving you the EPS for the previous year, because you will have to calculate the restated EPS also. Okay. So here is the EPS for the previous year. And you guys already know the requirement, but I'm still going to write it. And that is to calculate number one, the EPS. Number two, the restated EPS. Okay, guys. So in this question, there's a full market price share issue and then there's a right issue. Okay. And the earnings are 60,000. Okay. So the earning for this entire year is 60,000. Okay. So guys, the earning for the entire year is 60,000. The shares at the start of the year are 20,000. There are two events that are taking place in this particular year. Number one, a full market price share issue on 1st March and 1 for 5 right issue on 1st November. Okay. You guys have the EPS for the previous year, $4 per share, and you have to calculate number one EPS and number two the restated EPS. So what I want you guys to do is to start solving this question yourself first, and then you can resume the video to see me solving. Okay. All right. So I am going to start with the solution of this question, and I wish that you guys get the correct answer. I'll be very happy if you guys get the correct answer. So I'm going to start with the weighted average methodology. Why? Because again, there's a full market price share issue in this question, and more importantly, there is a lot of things happening in one year, so I need an average number of shares, right? Without that, I cannot solve it. So weighted average number of shares, I am going to calculate it. And first thing first, I have 20,000 shares in issue, right? Now notice one thing, that we have a 1 for 5 right issue. So until and unless this 1 for 5 right issue is done, we will have to adjust our shares with the bonus adjustment factor, because remember I told you guys that before the right issue you always adjust your shares with the help of the bonus adjustment factor, but once the right issue is done, then you stop it right there. You do not multiply anymore with the bonus adjustment factor, but before that you have to do it, right? And right now we are standing before the right issue, so we will have to adjust with the bonus adjustment factor, which means that we will have to calculate the bonus adjustment factor, right? So let's first calculate the bonus adjustment factor. Okay, so bonus adjustment factor, as we know, is the market price before the right issue, which is $5, right? And you divide it by the theoretical expiry price. Now I do not have the theoretical expiry price, which means that like always I will have to calculate it. So there was a 1 for 5 right issue, which means that I had 5 shares which were at a market price of how much? $5, right? So that's $25. And I got one new share, and that would be at a discounted price of how much? $4. Okay. So that's $4. So 25 plus 4 is $29, and 5 plus 1 is 6. So 29 over 6, this is going to give me my TERP, right? This is going to give me my TERP. So that is 4.83. Okay, so this is my TERP. So now I'm going to come and I'm going to divide 5 with 4.83. Correct? All right, so my bonus adjustment factor came out to be 5 over 4.83. Okay. So now once I have my bonus adjustment factor, I can just multiply this with the number of shares. So that's 20,000 into 5 over 4.83 into how many months? So from 1st Jan to 1st March, these are simply Jan, Feb, March. Jan, Feb. So these are 2 months, right? 2 over 12. And I am going to add it with. Now there was full market price share issue, which gave us 4,000 shares, 4,000 new shares. So 20,000 before, 4,000 new, that's 24,000 shares. So 24,000 into, will I multiply it with bonus adjustment factor? Yes, I will. Why will I not? Because see, we are standing over here at 1st March and it's still before the right issue. So yes, you are going to use the bonus adjustment factor. Okay. So 24,000 into 5 over 4.83 into 8 over 12, because from 1st March to 1st November are 8 months, right? And then there is a 1 for 5 right issue. Now, how many shares did we got in this 1 for 5 right issue? That is something I will have to calculate. So 1 for 5 into the number of shares, but 24,000 and not 20,000, because 20,000 is the number of shares at the start of the year, right? But then there was a full market price share issue of 4,000. So 20 and 4 is 24,000. So now I'm going to multiply this 1 over 5 with 24,000. Okay. So 1 over 5 into 24,000. That is gonna give me how much? Let me just do this on my calculator. 1 over 5 over 24,000. That's 4,800. 4,800 new shares. And if I add this with 24,000 previous share, so that is 28,800. Okay, 28,800. So 28,800 new shares into 2 over 12, because from 1st November to 31st December are 2 months, right? And because the right issue has already taken place, we will not multiply it with bonus adjustment factor, correct? So after doing all this, I'm going to get an average number of shares of 24801 shares, okay? 24801 shares, okay? Let me just rewrite it more clearly. I am going to get an average number of share for the entire month, 24801. Okay. And now I need to calculate the basic EPS. So that's going to be my earning. What was my earning? 60,000, right? 60,000, and you divide it by the number of shares, which are 24801. So 60,000 divided by 24801 gives me $2.42 per share. So that is my basic EPS. Clear? Now, in order to calculate our reach rate EPS, you guys know the formula, right? Which is that you take the last year EPS, which is $4 in the question, right? And you times it by 1 over the bonus adjustment factor, which was in this case 5 over 4.83. So 5 over 4.83, that gives me 4 into 1. Okay, let me just do it right over here. 4 into 1 over 5 over 4.83. That is 3.8. Okay. So $3.8 is my restated EPS. Okay, so restated EPS is $3.8. So I have my basic EPS also, and I have my restated EPS also. So those of you who got the correct answer, kudos to you guys. And this is the entire solution in front of you, right? This is the entire solution. This is how you were supposed to solve this question. Okay, so I'm going to zoom out a little bit so you guys can see the entire question and the solution in one frame. Okay guys, moving forward, now we are going to look at one last question that is again going to be done by you guys. I'm going to write the entire question and then you guys will solve it by pausing the video. Okay, and once you guys have solved it, then you can resume the video to see me solving it and then cross check your solution with mine. Okay, so this is going to be the last question for today's lecture. Then this area would be completed, and then in the next lecture we'll cover another very important area. So question number 3, um, let me just write the question pretty quickly. Okay guys, so this is the question in front of you. Okay, this is a complete question. You can see in the question there is a bonus issue also and there's a right issue also. So one hint that I can give you guys is that we'll be using bonus adjustment factor as well as the bonus factor in this question. Okay, so this is one hint from my side. Now you can use this hint to solve this question. Give it a try at least, and then you can resume the video to see me solving. Okay, so I hope you guys tried it yourself first. Now let's solve this question. Let's see how to solve it. So first of all, I'm going to be using the weighted average number of shares over here as well because there's a lot of thing happening in this year, right? And most importantly, there's a right issue which has a full market price element also. Okay, so we'll be using the weighted average number of share. The shares at the start of the year were 8,000. I will multiply this with the bonus factor. Why bonus factor? Because we have a 1 for 5 bonus issue, right? So that means we will have to calculate the bonus factor. How do I calculate the bonus factor? 100%, right? 1 for 5 would represent how much? 20%, right? That would be 120%. And then 120 divided by 100 would be 6 over 5, right? So 6 over 5 is my bonus factor, right? So I'm just going to multiply 6 over 5 over here. Okay, and then I'm going to multiply with bonus adjustment factor also. Why? Because there is a right issue. Because there's a right issue also. Remember, before the bonus issue, you will adjust for bonus factor also, and before the right issue, you will always adjust the bonus adjustment factor also, because there are two things happening in the same year, right? So not only will you multiply it with bonus factor, you will also multiply it with bonus adjustment factor. I hope that is clear, because right now we are standing over here at the start of the year. So at the start of the year, it's before bonus issue. So you will take the bonus factor also, and it's before right issue. So you will take the bonus adjustment factor also for the right issue, right? So I have already taken the bonus factor. Now I have to calculate the bonus adjustment factor, and for that I need the market price before the right issue, which is $8 given to me in the question, and I divide it by TERP, theoretical expiry price, which I will have to calculate like always. So I know that there's a 1 for 10 right issue, so 1, sorry, 10 and then 1, right? So 10 I would have bought at market price of $8, so that's 80. Okay, and 1 I would have gotten for issue price of $6, which would be less than the market price. So that's $6. So that's $86, right? This is 11 shares. So 86 divided by 11. So 86 over 11 is 7.8. So this is my TERP, theoretical expiry price. And now I'm going to divide 8 with this 7.8 to get my bonus adjustment factor, right? So this is my bonus adjustment factor. After having my bonus from 1st Jan to 1st May, how many months are these? 4 months clearly, so 4 over 12. Now plus, there is a 1 for 5 bonus issue. So how many shares did we get from this bonus issue? So just like the way we calculated 1 for 5 into the number of shares at the start of the year. So 1 over 5 into 8,000, right? 1 over 5 into 8,000. How many new shares did we got? We got 1600 new shares. So 1600 new share and 8,000 previous shares. So that's 9,600. 9,600. And now I'm not going to multiply this with the bonus factor. Why? Because now we are standing on 1st May. And on 1st May, bonus issue is already done. Therefore, no need for bonus factor now. However, I am going to multiply with the bonus adjustment factor because we are standing at 1st May, which is before the right issue, right? So again, nothing difficult. Same thing, right? So 8 over 7.8 into what's the number of months from 1st May to 1st October? From 1st May to 1st October are clearly 5 months, right? Plus, now from 1 for 10 right issue, how many shares did we get? So 1 over 10 into what were the number of shares? 9,600, right? So 1 over 10 into 9,600 will give me 960 new shares, right? So 9,600 previous share, and then we got 960 new shares, so that's 10,560. 10,560. This is the new number of shares, okay, after adding the shares that we got from the right issue. And I'm going to multiply this with the number of months from 1st October to 31st December, which is 3 months, okay. Now you can see I did not multiply this with bonus adjustment factor because now we are standing at 1st October and right issue has already taken place, so no need to adjust. So my weighted average number of share after simplifying this is 1007 shares, okay. 10. Oh, so there's one more zero over here. And this is 1,007. Okay, so let me just quickly correct this. We have 1,007 shares. Okay, now I'm going to calculate my basic EPS like always. So okay, so my basic EPS is gonna be what was the earning throughout the year? 40,000, correct? And I will divide this with the weighted average number of shares that we got 1,007. Okay, so that means a basic EPS of 3.99 per share. Okay, so this is our EPS right here. Now let's say just to um, further extend this question, because I want you guys to know everything. Okay, so with this effort, I am just going to extend this question a little bit by asking you guys that if the question would have asked you to calculate the restated EPS, how would you do that? So let's say the question gives you last year EPS as $3. Okay, last year EPS as $3, and it asks you to calculate the restated EPS. How would you do that in this case? Because see, in this case, you have not only the bonus adjustment factor but also the bonus factor because there is a bonus issue and right issue. So what will you do? Well, it's pretty simple. What you will do is that you will take your last year EPS, which was $3, right? You are going to multiply it with 1 over the bonus factor. So what was the bonus factor? 6 over 5. So 1 over 6 over 5 into 1 over the bonus adjustment factor, which is 8 over 7.8. So you see, since in this question we had our bonus factor also and our bonus adjustment factor also, so that's why we are multiplying our last year EPS with both the bonus factor and the bonus adjustment factor. Okay, so this is something I wanted you guys to know. Okay, so 3 into 1 over 6 over 5, okay, into 1 over 8 over 7.8. So that's 2.43 or just 2.4. Okay, that is your restated EPS. And with that, our lecture number 2 is completed. Now we will start with lecture number 3. And in that lecture, we'll be covering the concept of diluted EPS with some other very important thing. Okay, so this is the complete question. This is the complete solution you guys have in front of you, right? If you guys want to copy it down, you can. Okay, and that is it for today's class. I hope this lecture was helpful for you guys. Please make sure to subscribe this channel, like the video, and share it with anyone who can, be who can benefit from this video. Okay. And if you guys have any query, you can comment in the comment section, or you guys can see the WhatsApp number somewhere on the screen. I will make sure to add that on the screen so you guys can see that, and you can WhatsApp me directly with any queries that you might have, and I will respond to that as soon as possible. All right. So meet you guys in another video. Till then, take care. Goodbye.